Hey guys, how are you doing? Been a while, hope you've been good. So, on this episode, I decided to do something different. I'll be teaching you guys on how to use the breaker block in the most efficient way while trading. So, this is GPBUS still, and looking at the charts, I strip down from the daily time frame to the 4-hour time frame just to transpose the annotations and markings I made to make it clearer. So, this is how you mark out your chart before you start trading. Daily highs and lows are a strong draw in liquidity, and you see PDH there, that's previous daily high, and PDL, previous daily low. So in case you're still struggling with understanding the daily bias, you just mark out your previous daily highs and lows, or Asian highs and lows, or short-term highs and lows. Then wait for your setup, just like you see me do. So 7 a.m. starts the forex killing. That's the next thing you do. You mark out 7 a.m. and wait for the market to take out a short-term high or previous daily high liquidity. Since we're bearish here, the reverse is the case for a bullish market. So the previous day was bullish. Also, this day was a continuation move from the midnight opening price. So once we're in the Q zone, I then waited for a run and stop on the high behind the Q zone. And once the market takes out this high as liquidity during the Q zone window, you don't just pick tops and bottoms and start pushing buttons. You wait for your setup. So the setup I use here is the breaker block to fair value gap. So what is a breaker? A breaker is a high to low, then a higher high when bearish. Then your displacement down with a break of structure or market structure shifts and your fair value gap. And this low there, the down close candle is where your fair value gap you from for your short entry. So the reverse is the case when you're bullish. So looking at the chart here, the market took out this high here once we're in the Q zone and started going down. And if you were to pick highs as double tops, you will get stopped out with that higher high, then a displacement down, showing bearish market structure shift. So this high, low, higher high, then the down close candle or the low is your breaker block. If you draw that out, that's where your fair value gap to make your entry will form. So there's also a fair value gap above too. So most times you get a return back to the fair value gap above there, and most times you don't. So it's better to make your entry on the breakers low with your stop loss on that high or the breakers high. But it's safe to keep your stop loss on that high. So when you make your entry here, you risk 1% or less than that, but your money management should allow you whether you run to the higher fair value gap in case it happens to get here. So with that displacement lower, I got my extra confirmation to go short. So I made my short entry in that fair value gap after that break of structure there because there was a consolidation. So this was like an extra confirmation I was waiting for. But because of the consolidation, I decided to shift my stop loss to that higher fair value gap because like I said, you might get stopped out during the consolidation. But then I reduced my stop loss to that high because I wasn't expecting price to take over that high since there was a break of structure. But then I got stopped out because of the consolidation, you won't be sure. That's why it's best to place your stop loss on that higher high. So then since I got stopped out, I was still waiting for like an extra confirmation again to go short. Then I made another short entry on that little fair value gap there. That was because when I used the 5 minute time frame, I saw that volume imbalance with that little market structure shift. And then I was still trying to place my like I was using aggressive stop loss. I still played my stop loss on that high because this time I was sure it's not going to stop me out. Then the markets went as planned and resumed going lower. Just as it should after the consolidation. But that was out of the forest skills and like during the 11 o'clock, 12 o'clock hours. And then after then, I marked out this fair value gap again. In case you missed a setup, you can take the short entry and place your stop loss on that other high. But that was close to the end of like during the PM session, close to the PM session. So yeah, it was still eligible to make the entry. And yeah, you can see the executions too. So until I see you next time, be safe.